Good morning. I'm Vince Lancy, and this is the market rundown, the morning meeting. And we're going to talk about gold today and silver. We're going to talk about in the context of last night's activity because it's current events and it should be discussed as you get ready for your day. And in premium, we're going to talk about a new report by a bullion bank. I think it's a very important report. Anyway, let's look at the prices first. The dollar is up 60. 10-year yields are at 452, down 06. S&P 500 is down 16 at 51.81. The VIX is 1535. Gold is at 23.92, up $20 off the highs, I should say. Silver is 28.99, near the highs, up 57 cents. Copper is 430, just shy of 432, up 7 cents. Oil is up 57 cents to 86.43. Natural gas is 170. Bitcoin is up 848, 78.39. Ethereum is 35.33. Platinum, palladium, both up and seemingly tracking silver now, as it should be, right? Palladium is 1060 up 12, and platinum is 995 up 24. I think you're seeing spillover into other metals. This is investment. This is not economic, in my opinion. All right, looking at all those prices together, forgetting what we want to happen or what we think is going to happen or projections of things like they want the gold, which is true. But if you just look at that as a snapshot, that's a sign of crisis or a predictor of crisis. Now, predictions are not really good, but when you look at all these things taken together, it leans towards armed conflict. It actually does. It doesn't lean towards financial crisis. This leans towards armed conflict. That's what that means in a snapshot. But if you zoom out a little bit, you look at the geopolitical situation. I think this is getting closer and closer to the bone between the China-United States problems and the de-dollarization. Well, the dollar's up, you say, yeah, but that doesn't matter. That's the dollar against the euro and the dollar against the yen. And the yen is going to zero right now. And the euro is worth shit because they can't get their economy fixed yet. Okay, so this leans towards, on the face of it, concern about military conflict. So you could make the case that this is worrying about an escalation in the Middle East. You could also make the case, if you zoom out the way I like to, that geopolitically this is a representation of the problem between China and the U.S. Remember, this is happening after Yellen left, right? Yellen going to China is not good. Stop letting Yellen go to China. But so that's where I am. I'm looking at it as these two things possibly at the same time, and the market just freaking out about it. And of course the deficit. But that's it. So let's go to the main story. Here's the site. This is something we put out yesterday. It was a breaking news item. We just got a report from a bullion bank, and they raised their target, and we think it's very significant, not because of the price target itself, but because of the timing of it. And this is what we talked about yesterday. And CPI again, a lot of precious metals content right now. It's hard to keep up. We're not even writing. We're doing these and we're sending out information. Okay, today, I thought today would be, I read something last night written by Zero Hedge, and you know what? Just read it. It's good. It's really good. And it tells the story that we need to hear right now because it's true. Okay. While Bitcoin was rampaging higher, gold bugs stared in disgust, wondering why their non-fiat god had forsaken them. After all, when the collapse of the dollar and fiat in general finally arrives, gold will be one of the very few currency alternatives still standing. Alas, ETF flows have not provided any respite, because while Bitcoin ETFs soaked up most money in the past 3 months, aggregate gold flows continued to shrink. That's true. And yet, starting in the beginning of March, gold finally broke out from the black hole gravitational attraction of the Bank of International Settlements trading desk, parentheses, we talk about those a lot here, and has soared some $300 in just 6 weeks, its fastest ascent in decades. And there's that chart. Fast forward to tonight, they wrote this last night, when, with most other assets quiet, it's true, gold suddenly surged higher. And after closing at an all-time high, the precious metal spiked by another $15 in a matter of seconds. That's after on the reopen in Asia, a move which for the otherwise hyper-lethargic assets is the equivalent of a turbo boost. And while it's now just a matter of hours, if not minutes, before spot rises above 2,400, gold futures are already there. The active June contract just hit a new all-time high of 2406.90 moments ago, around the time Chinese buy orders started rolling in. And contrary to speculation that this is just a fat finger or another one-off buy order, gold future volumes are solid, especially given volumes would have already been very high in the last few days. June 2024 volumes are now 23.5 thousand lots versus a 5-day average of 17,850 lots. While it wasn't clear what sparked the buying frenzy, UBS trading desk notes that gold futures gapped up $10 as they traded through Thursday's high on what felt like stop losses being triggered. 500,000 ounces of futures volumes were behind the move. Okay. I think it was people getting in, not getting out. What happens next is also unclear, though. The current divergence between gold prices and 10-year yields suggests that something awful is about to happen. And there you go. I mean, this is it, right? This is, people are going to start talking about this. Now, that's a great write-up, and I'm happy to have read it. Look, either gold's going to drop or 10-year yields are going to collapse, right? So that chart there, if you're not familiar with it, that's the gold price in light blue, and that's the 10-year real rate inverted. So at the 10-year real rate goes down on the chart, meaning increases, gold's supposed to go with it. So as 10-year rates get higher, gold should go lower. So they moved in tandem, so they kind of inverted it. But that hasn't been happening since as far back as 22, and most markedly starting in, I'd say, mid-23 during the rate hike. During the rate hike, that's when it really got obvious to me. Anyway, you can't have this continue to happen, okay? If you have this continue to happen, this means we have to debase, okay? Or gold has to drop. So that's pretty much it. That's, I think, the most important part of it's the chart that matters. All right. So what happens next is unclear, though. We could drop $500, but this market would still be fine, $500 lower. That's where we are now. Wrapping this up, the gold outlook report there, that's the one we've referred to before. You could see who the bullion bank is. And that's the news that matters today. The data, 10 a.m. consumer sentiment, preliminary for April, will be important, but it will be an excuse to trade. It won't be as important as it normally is. I'm Vince. Oh, wait, look at a chart here. Let's look at a chart. So we've got gold on the daily. Looks like this, right? Silver, not to be neglected, is now keeping pace, if not outpacing, as it should. This whole market is now, all of the metals are in play now. That's what's going on. And I personally think some of it is China's money being printed and going into precious metals. Because as they debase their yuan, they debase it by buying gold, which is going to be backing their yuan. And there you have this self-reinforcing cycle. Anyway, have a great day. We'll see how it ends. If you were to buy gold or silver today, you should expect to lose money for the next 6 months, but you should expect to make significant money over the next 2 years. That's my comment. I say that because, well, I just bought some. See you later.